Welcome to the latest edition of our virtual investor series. I'm Susanne Matern and I'm responsible for the European Structured Finance Analytical team. Today I'm joined by Alessandro Pighi, the head of our EMEA RMBS team, and we will discuss the impact of the cost of living crisis on EMEA RMBS. So Alessandro, given the rising interest rate environment, cost of living crisis, which European mortgage markets are the most exposed to these risks?
So I think that generally speaking, all markets in Europe will face an increased level of arrears and a decrease in demand for new credit, new lending in housing. So that's the overarching environment that we're facing. In terms of those jurisdictions that are going to be more affected, those that are facing borrowing at floating rate, because clearly an increase in rates is an instant shock to the borrowers. So in Europe, we've got a still large subsector, the UK non-conforming sector, that is on floating rate, and Portugal in Iberia, which is still a floating rate market. So those are the two markets that I would see as more impacted by the current situation.
And what about Spain? I think that market used to be floating as well.
That's true. So Spain, the legacy production was floating rate, so vintage transactions and vintage RMBS are still exposed to that. Whereas for new lending in Spain, over the years have been a switch from floating to fixed, a bit like Italy. So newer borrowers, so to speak, will be a bit more protected.
Let's now focus on the UK, the largest of those three markets. So what are the main risks you see over the next 12 to 18 months in the UK mortgage market?
Yes, in the UK, specifically for living costs and increasing mortgage rate, we put out a special report a month ago. And just going in terms by subsector, in the prime subsector, we think that the pocket of risks are within lower income households, higher LTV borrowers. So those will see, we estimated a reduction in discretionary income by 25%, which is quite a remarkable figure. Lower income household in prime RMBS is underrepresented, but still, if we look at the lowest income decile and the higher LTV pools, there's still a 5-6% of borrowers that are within that bracket and that will face some hardship, because 25% of a small number is even a smaller number. So that's where we see risks in prime. For buy-to-let, there are risks on the occupational side and on the demand side. So on the occupational side, because tenants are typically akin to lower household income, will face the same constraints that lower income households have in the prime space. So buy-to-let landlord would have to cope with it, either by their own means or potentially by reducing their portfolios or even disposing assets and exiting the space. From an investment demand, clearly buy-to-let landlords exiting the space means less demand for credit, and also refinancing in a higher rate environment with rents that probably are at the peak of the market. It's probably going to be a bit more difficult for them. For non-conforming, it's an historical vintage portfolio that had faced arrears and underperformance in the past. So a straight increase in living cost and mortgage rates will definitely impact the sector.
Yeah, that makes sense. Now, we have focused a lot on risks, but there are also supporting factors. One is the tight labor market, and I believe unemployment is, at least at the moment, not forecasted to rise significantly. And then the other supporting factors are the support packages that have been announced in various countries. What's your take on those?
Yes, clearly unemployment is the main indicator that we see as a risk in RMBS. But you're rightly saying, you're talking about these support measures that are being implemented as we speak, both in the UK and in EU. They seem to be targeting and insulating borrowers from further increases. So the increases up to today, broadly speaking, will be borne by borrowers, but future increases that are priced in the markets are probably going to be borne by governments. So that's clearly a positive. It remains to be seen what happens in the business side of things, so SMEs, small enterprises, which are clearly a channel of unemployment or strength of labour market in the opposite direction. And clearly this will have a ramification for public finance, but that's not our remit for today.
Thank you very much.
Thank you.
Thanks for your insights. And thank you for joining us today. For more information on European housing and cost of living crisis, please visit us at fitchratings.com. And if you do have any questions on the topics we discussed, please send an email to the address on the screen.